Hello everyone. Stocks are rebounding from a two-day slide as strong Micron earnings reignite AI optimism, while Bitcoin bounces from the key 60,000 psychological support and dollar-yen holds near intervention levels ahead of key PCE data. This is your midweek technical outlook here at xm.com. Now let's get right to it. Now let's start with the US100 index, which is currently extending a two-day rebound to test the key 20-day SMA near the 29,871 level. Should it manage to break above this level, then the next resistance to watch is the key 30,000 psychological mark, followed by the record high notched earlier this month of 30,759. Now, should it pull back from the 20-day SMA, then the first support comes at the 29,000 psychological mark, where the 50-day SMA lies, and it triggered this week's rebound. And then further below, the next key support is the 28,350 level, which has been capping losses since early May. Now, a break beneath this area could likely accelerate losses toward the 27,000 region. So this support is a key to hold in order for this consolidation beneath the record high to continue for now, as reflected in the momentum signals, which are reflecting fading of the bullish bias but are supporting consolidation in this positive territory, as both are in positive territories but are just flatlining, reflecting and mirroring this sideways trading for now. Now let's also have a look at dollar yen, which is extending at 10 sessions in the green, almost uninterrupted, holding within this intervention territory between 160 and 162. It is currently trading near the 161.70 level and eyeing a breakout of the 162 level, which is tracking July 2024 highs, so multi-year highs. A break above this area could then target the 162.88 level, which is the 138.2% Fibonacci extension of this April to May pullback. And then higher up, it could target multi-decade highs, targeting the 164 level from November of 1986. Now, should it pull back from this area, as intervention risks are rising, then immediate support might come from the 160.70 level, followed by the 20-day SMA near the 160.40, and then further below the 160 psychological mark. And then another key support to watch is the 50-day SMA near the 159 level. That said, the pair is trading well above this long-term ascending trend line and is holding a strong bullish bias, as reflected by the momentum signals. Both the MACD and RSI are tilting higher. But that said, risks do lie for intervention for now, and as well as we're expecting the PCE data that could further strengthen the dollar. So we're watching to see if this 162 level breaks. Now let's also have a look at Bitcoin. Bitcoin is rebounding toward the 61,500 level. It printed a fresh yearly low in the previous session. It dropped to 59,077. It dropped below the fresh yearly low it printed earlier this month of 59,111. This is the second time this month that it's been breaching the 60,000 key psychological support. So sentiment is bearish for Bitcoin. However, it has managed again to rebound and recover from this market bottom, and it's currently eyeing resistance near the 62,000 level. So the next key area to watch is the 20-day SMA near the 63,100 level, and then higher above the 65,000 level is another key area to watch for a breakout. And then the monthly highs near the 67,000 are the next key resistance, which, if broken, could then revive upside and potentially target the key 70,000 psychological mark, which is another key test for a more sustained upside for Bitcoin that has remained for most of June just subdued below the 67,000 level. Now, to the downside, support comes from October 2024 lows, which it tested twice near the 58,500 level, and then further below from September of that same year near the 57,500 level before it could accelerate losses to likely to sub 50,000 levels. The momentum signals are reflecting the bearish bias. They're all holding in negative territories. However, there is some easing in selling pressure with the MACD edging up from the negative territory. There is side tilting above the oversold, and the same with the stochastics hovering above the oversold threshold. So they are suggesting that for now, this consolidation within bearish territory, within this prolonged downtrend might continue for now. Now that's all for today's market wrap. Thank you for watching.